One of the most frustrating things in trading is when you kind of know what's going to happen, you know this looks like a turnaround pattern, you are ready for the breakout, you know there's a high chance the market will go short, you have the divergence, but then this happens. We are faced with this huge, large red candle, and now what you're going to do. And the most important thing in those cases is what I can recommend: don't chase the price, don't chase the trade. I know it is very frustrating to see this candle and to kind of feel that you've missed the boat, but over the long term, you'll be very glad. Instead, wait, and very often you will get a second opportunity. Everybody who traded this market short and chased the price will have their stop loss somewhere in this stop zone. So this is our stop zone, right? And if the market takes off and if it keeps going down, so be it. We don't want to get into those trades because long term they're going to ruin our trading performance. But another trading plan is to keep the bearish bias because the market has clearly rolled over, and wait for the stop one. Wait for the market to go back into the stop zone and then show you signs of weakness. That's then where you find really great liquidity trading opportunities. So now you can see the market made it all the way back, retested the previous highs, and it seems like the market is rejecting the highs. And now if you're an aggressive trader, you could think about getting in even up here. You just want to see some bearish momentum. You could place your stop loss outside of the range. If the market makes it all the way above here, you don't want to be in the market. That's not a bearish trade anymore. But now looking at this, even if we target just the previous lows, you get a 3.6 reward to risk ratio, which is really exceptional. And if we extend the target down, we could even easily get a 5.0 reward to risk ratio on that trade, something that you will never get if you chase those large candles. So that's really the key. Of course, sometimes those large candles will keep going, but long term, if you want to be a successful trader for the next 2, 3, 5, 10 years, you want to make sure that the odds are in your favor. You want to make sure that your winning trades are really large, can easily cover the losing trades. And that's really a trading system where you can trade with a lot of confidence on your side. And you can see afterwards the market unfolded, and you have way more flexibility if you trade trades that way, because you can see your stop loss is tight, your target and your reward to risk ratio is really large. You have a lot of opportunities and possibilities to trail your stop loss along the way. Use a daily pivot, maybe a 50 or a 20 period moving average, depending on the sensitivity that you prefer. And that way, your trades will be much easier to manage. You will get in at a much better price. If you want to be short, it is obviously best to short at the highest possible price, right? And that's how you do it. Don't chase the price, look at stop zones, and then wait for your opportunity. If you miss it, so be it. There will always be a next trade.